I don't even know how I want to start it.
Yeah.
Finally, it's here. Future investing and Stock Goat actually get together. It's wild to actually meet you, Kyle. Um, let's just jump right into it. SoFi, man, why are you invested?
Oh my goodness. Guys, I've been following the stock market specifically since, the COVID. I know that sounds like the hype, but that was an opportunity to get in the market because, it spread like a wildfire, the fear. So that's when I really started analyzing companies, and I was always looking for growth, 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 growth. You guys know when the SPACs came out, there might have been 1,000 of them, maybe more over the past like 2 years. And I would literally like every night dedicate like hours to just looking at the investor presentations. And you had some companies pushing out their numbers for 4 years, no revenue. I was like, what the heck? Like, how are these companies able to go public with like no revenue for 4 years? So I don't know how that happened, but I was looking for companies that had numbers right away. And I think SoFi was in maybe like the 600 million range or something like that. But what they were showing on their like adjusted EBITDA, if they were getting their bank charter, the numbers were looking really good, like really aggressive. Like um I think the top end for 2025 was like 1.5 billion or EBITDA or something like that. But that's what really got me excited. And I know the presentation didn't work out exactly how they planned because the bank charter was 1 year delayed.
Right.
But if they would have got it like 1 year earlier, I mean, we would have got profitability like 9 months ago, like easily.
Sure.
And I just think that at my age, like I went back and I thought about like when's the last time that I've been to a bank? And I honestly think it's been 1 or 2 times in the past 4 or 5 years. And every time I go, there's a line, and there's always like an old person in front of me, and the person is like asking for the most pointless stuff, like cashing a check, and I'm there to like I don't know close out a loan or something because like I can't get a hold of anybody on the phone, and it's just like these people are like so brainwashed of like they can't. I guess it's because they're older. They don't understand like you're wasting your time like driving to a bank
They
and
don't even know their options, right? this
exactly.
is
So,
this is what they're used to, and so they're going to continue to do it.
yeah, and young people are just like lazy and they want to get things done faster and faster, and that's why all these young kids are just shifting to what's easier. And SoFi wants to make it as easy as possible to do everything. Like one more analogy is like I remember when I did my first tried to get my first mortgage, like a home approval. It was with a company called Suncoast Bank, and basically it took 10 days for the guy. It was a guy like communicating with me by email every day to get back to me to get the approval or denial. And 10 days came back later and I got denied. You know what I mean? It's just like they're spending so much money just getting nothing done. And now you
Right.
got
Right.
SoFi who's, I mean, it could be like this could be like a one third like AI play that nobody realizes with all this machine learning putting whatever you need in your face right away. You know, you got cash. They're gonna give you the what is it? The personal loan to like cut your debt down. They see you searching for homes. Boom, mortgages in your face right away. They see your stocks. You're buying a little. They recommend different stock opportunities. It's just they know what you need, and that's why the earnings are 8 in a row. 8 to 10 earnings beats in a row. They can't miss because they can adjust their numbers mid earnings. Like let's say the second month something's slowing down, they just crank something else up to beat the EPS and revenue every single time. It's just like, can they miss with this? You know, this AI that they really have AI that makes sure they don't miss numbers.
I mean, either their new members are going to continue to climb by like over 400,000 new members each quarter, and SoFi is going to become the big name, or they're going to offer their tech platform to all the existing names, and then they're still going to benefit.
Yep, so
you
many
know?
different options. Like
Yeah. Yeah.
I would definitely like to see the like if they get a little bit bigger, let's say they actually turn, some profits. Let's just say, for example, they're putting like 100 million in their pocket, like let's say maybe like Q1, they should be able to crank up the ad spend on the marketing and get the same type of members, and bring it up to like 500, 600 for the next year. You know what I mean? Like I just don't see 400 forever. I feel like they have to crank it up a little, and that'll 600 would be, 2.4 million members per year, which is pretty dang good. But I think they can't really do that yet until they turn this profit, for investors, make them happy. They can't, they just have to keep it at 400 right now.
Yeah, I think you hit the nail on the head. I think they're going to keep it once they hit their 400,000 quota. I think they just cut their ad spend, and because profitability is what investors want to see right now. But
Yeah.
like you said, there will be markets where like growth is what people want, and they will focus on that, especially after they're gap profitable. Of course, they're going to be focusing on 600, 700,000 new members. I could absolutely see that.
That's when it really can take off because they're just gonna uh, they keep people happy and then they cross buy them, and then 5 years from now everybody's at 3 products or something like that. I mean, you're talking some serious numbers if everyone gets to like 3 products.
Right. Right. So we're getting people in on for SoFi money and these sorts of products, direct deposit, SoFi Plus, whatever.
Yeah.
And then after a while, we sort of focus on either can we put them down SoFi credit card or the invest products, or maybe they need a loan. As those customers stay there, from what I'm assuming you're saying is like, okay, well then they might actually use the invest product, the credit card, and the loan, continue to grow. Maybe with new products like SoFi Travel, I'd love to hear your opinion on that as well. Like super, super cool. No other bank is doing this.
Yeah.
Like what do you think about SoFi Travel? Let's dive into that.
I've looked at it a little bit, but like I said, from the kids that I know, my age, there's people that, they don't even have, an excessive amount of money and traveling like crazy. Like a lot of girls and women that I know, I mean, they're traveling 4 or 5 times a year. You know what I mean? And if put something that like people are gonna like navigate to the platform, like SoFi is the get your traveling discounts. That's gonna get more of the younger generation over even faster. So I don't really see anybody else doing this right now. I travel a little. Like I said, I've been to Canada, did some snowboarding. If SoFi like saw me looking up some Canada stuff, hey, book your, hotel, your snow gear and stuff, get a discount, I would be all over that. You know what I mean? Stuff like that.
Yeah. Not to mention you can't book with SoFi Travel without the credit card, right? So um they want you on the credit card. They'll give you the 3% cash back. They get the lead generation fees from Expedia. They get all the interchange fees. It's an amazing deal. And the craziest part is this is just for travel, Kyle. Like what happens whenever they get into all sorts of deals with pharmaceuticals or, like you said, with rental gear or anything like this. I mean, they could do all sorts of different partnerships with the big names. They could do stuff with Turo, with Uber, with like, if you book with the SoFi credit card, we'll give you massive deals, and those companies will be happy to partner with SoFi. That sounds pretty good.
SoFi will be able to afford it too when you don't have 1,000 branches just costing you money because freaking people are walking in clueless. It's just so pointless. I'm almost tired of it. Like when I see a bank driving, I'm just like why is that being built, or like why are they still up? Like it's just people are just wasting their time. You don't need to go inside of a bank. You don't need to
Yeah.
sit down with an advisor. You can freaking FaceTime them, call them. It's just I think that it's just that age gap, like 18 to maybe top it out at like 40 is just like done with it, like people are gonna be shifting to digital as fast as they can.
It's true. It reminds me of Tesla in a way. Like if you have these sort of things like branches, then people get used to them. It's really hard to take them away. But if
Yeah.
SoFi just offers this solution and you know doesn't give anyone a feel for branches, then no one's worried that SoFi doesn't have branches. Like they
I know.
offer a great offer through ATMs if you do need cash or something like this, but then still like then they can give more to their own customers, like 4.2% in their savings, or potentially even this is a question that maybe this will go into. How long are you holding on to the company, and do you think that you'll see a dividend from SoFi stock?
Um, so basically, I have to be honest with you guys. I mean, I've been following the stock for 2 years. So man, I mean, I've been buying forever, just high. Like I bought over 20 before, over 15. Like I was buying heavy at one point. I thought I was getting discounts at like for mid-teens and stuff like that. So um some of you guys that I see people all the time, I got a $5 cost average, and I'm thinking, well, I mean, you probably haven't been following the stock that long, so you should be confident that you're buying it at these levels. So my average right now, I brung it down dramatically, especially this past week. Like I've been waiting for the under fives, and I don't know if you saw my buys, but I actually showed how many shares I was buying and stuff, and I probably bought like uh let's see, maybe like $12,500 worth, which is, it's a good amount of shares, but I was buying all under five. So I think I brought my cost average down from like 16 to 10.
Yeah, I mean, you, me, and Anthony Noto are buying under five, eh?
That stuff helps your average like ridiculously when you buy
Yeah,
high. It just like hammers your average down. But I mean, I definitely would be for like SoFi, of course, having that long-term mentality, as definitely like a younger person, like in their 20s, it's not easy because you got to be very, very like your emotions. You want to sell one week, things get nasty, but I mean, I would definitely love to hold this stock for uh, 5 years or more, but I would definitely be open to like selling like a third if it went to like 25. Like I would just want to, maybe 20 to be honest, just like recoup all these like losses I've been having for 2 years in the stock market. I would definitely put a third of that money into like a house, like a mortgage. I would want to, try and get a house. So that's what I would probably do. And I have a lot of shares. I think man, yeah, like 7,000 or something like that shares.
sure,
So
yeah.
it's down right now, of course. Like it may only be worth like 35 or something, maybe 40,000. So it's down a lot, of course. But if you see how fast these stocks move when good things happen, I mean, just look like uh everyone, like, if you're down 50%, everyone's like, oh, it's over, end of the world. But it's really not, because like you go back in time, Amazon went from 100 back down to 3 or 5. You see what I mean? It's a 20x to get back to 100.
Are you talking about back in like
Oh
the
three,
year 2000 or whatever? It was like,
yeah, the 01 to 02
yeah, it
range.
was like $108 went down to 8 or something like this.
So think about all the people like, I'm getting a deal at 90, I'm getting a deal at 80, I'm getting a deal at 70, 40. You know what I mean? It's just that's how the game goes. You just gotta cost average, and hopefully you don't buy at an insane valuation. But this valuation right now, I mean, we can't price it on earnings, right? I just feel like right now you got to price it in at like sales, because and your growth. And I just don't think SoFi's worth uh 2.5 or 3 times sales. Like I just think like that's a joke. I mean, just look at what Apple's price to sales right now is, and they got about 10% growth. I mean, they're at what, 6 or 7 or something like that right now.
Yeah, yeah.
That's
I
a,
I look at SoFi and I just think, like, I try to compare it not with other tech companies, but like other banks, even like cut out the tech company. Let's look at it as a bank. No, they're not net profitable, but
yeah,
they are, in an adjusted EBITDA sense. They're not burning cash. They are making money.
yep,
Like, for their balance sheet, they are growing. You know what I mean? So if you're worried about the stock-based compensation and these sorts of things, I mean, there have been countless great investors. Like, I don't know if you know Chris Hager or what, data-driven investing on Twitter. He did a interview with the CFO of SoFi, Chris Lapointe,
yeah,
and brought up great points. And they're bringing down the stock-based compensation. And if these sorts of prices don't actually vest in time, like, a lot of what they considered net losses might
yeah,
actually get written off if the prices of the stock don't actually meet where they should in time. So I don't know. I think people are right, or Anthony Noto is right, in looking at the stock based on adjusted EBITDA. I do
yeah,
think that's important, and it's people like Charlie Munger and these sorts of people that give investors this, I don't know, gasoline or whatever to say, no, that's a BS statistic. But it's like, it's all in a per stock basis. And I think for
Yeah.
SoFi, it actually is a good metric of how to value the company, you know?
Yeah. And
But
EBITDA, I mean, it skyrocketed. Q3 to Q4 was the big skyrocket. I mean, it went from 20 to 70 or something like that, or 25 to 70.
yeah,
And
yeah,
I think Q1, I mean, they still increased a little bit, but
yeah, 70 to 76.
the Q2, you can just tell by what they put out on their guidance, like something's about to, I don't know where it's gonna come from. It's either gonna come from student loans, or not, sorry, take that back. It's gonna come from personal loans cranking up a little bit, or financial services just cutting losses. Like, I mean, they could be at like 5 to 10 million in losses finally, and that's another 20 million cut. And I think that though it's gonna be one of those two. It just takes off in Q2. Could be financial services, just the way with the stock market coming back a little bit. And SoFi, they're just financial services is they're doing more revenue than Galileo.
Yeah, it's growing very quick. I think they
I
here, wait, let me see if I can bring up a chart maybe.
When I saw that,
Um,
what the hell's going on?
but yeah, they grew so fast. They continue to grow so fast in their financial services. And that's actually the part that I'm so excited about, because whenever you look at the product count for like SoFi Invest or SoFi Money,
Yeah,
like the product counts are great, but it's not including options, margin, buy now, pay later. Those are all products within those product counts. So if you were to actually look at like a user like yourself, you might have an invest account, margin, options, everything like this. It's like, okay, that should count for something if you're just looking at the company just from a product number or standpoint, you know. But yeah,
I've
their financial services are exploding.
used the firm's buy now pay later before. I mean, it was, can't lie. I mean, it was freaking easy.
Yeah,
Like, I mean, they approved me for, because it was for my business. It was like a big machine I needed. It was like $3,000, and I mean, I got approved within, like, I think like maybe could have been a couple hours or a day. It wasn't longer than a day, and then boom, the payments start. And I think I got no interest or something like that. But it'd be cool to, like, use something on SoFi's, to test it out.
yeah. Have you not used their buy now pay later products at all?
No, not yet. But
Gotcha.
are you able to, like, can you get on the SoFi? You can't make an account. Can't make an account.
No, no.
What can you
So
do? Can you go on the website? And I don't. Yeah, yeah. You
yeah,
can go.
so I can go on the website. I can see everything. The problem is whenever I try to make an account, they're asking for your I don't know what you call it in America, your social security number or whatever.
Yep.
So I just have no way of giving that, and so I can't get past the actual sign up portion. They send me emails saying, you know, we have a great personal loan opportunity for you and everything like this, but I can't create an account. Um, but yeah,
Are they working on that? Are
sorry.
they working on that for, like, Canadians? And
I don't know. I don't think so. I think that'll be a very long time. It's like one of the largest comments I get in all my
yeah,
in my comment section is like, when is SoFi coming to Canada? And I think it'll be a long time. Um, you look at some of the companies that are already pretty large in the States, like Venmo or Cash App, or
yeah,
and these aren't even chartered banks. They'll have a much easier time expanding uh, you know, to their uh, neighbors to the north, and they're not even there yet. So I
yeah.
think SoFi is going to have a very hard time, uh, you know, getting up into Canada. We have really strict regulations, and it's terrible, honestly. But um, I mean, it's good and it's bad. I don't really want to. We'll talk about that another time. But um, let me ask you a question. I couldn't get the numbers for the financial services. If whenever I edit this, I'll throw it up on the screen
Let me see if I can find them.
afterwards. Wedbush.
Yeah,
David placed this stock at a $2.50 price target. You know, naming a couple different reasons. One of them being that, you know, they're getting too many personal loans, not selling off any, and maybe it's because the marketplace just doesn't exist for them to sell their loans at the price that they want to, and so the company keeps getting riskier and riskier. Do you believe that? Do you think this is absolute BS? Tell me about it.
I'd say it's BS just because of like the credit score that the members are holding. I mean, we can go back what 8 quarters, and what's the pullback been? Is it what is it 5 points or a year and a half? It's been like what 10? I don't know if it's 10 points, but it hasn't dropped a lot. And then
Sure.
on top of that, like the SoFi knows that these like loans that they're putting in people or giving to people are longer term, like these are I want to look on because I've tried to get a SoFi loan and I couldn't get it, but my guess is these could be like 2 to 5 years on some of them, and like what's the point of selling them and having to just get more people back into loans when you can just hold on to them like Mizzou is saying, and they're worth more the longer you sit on them.
Right.
So what is that called when like you dump your loans and then you re-originate some more? They don't have to do that like right now, you know what I mean? And this guy's saying you have to sell them. You have to be selling them or then the market's not going to accept them and stuff like that. And Missoula was just saying that's delusional. Like SoFi's
Yeah.
holding on to these for more yield, like, and they can do that. It's not illegal.
No, no, it's not illegal. I think maybe like to defend him a little bit, I think if we keep growing deposits at the rate that we're growing, we're going to have to keep selling those loans. Like we
Yeah,
can't hold on to deposits without selling loans because then we still have to pay out the 4.2%.
yeah,
It's going to
that's
become a big liability. So if we continue to hold all the loans, and if there is, let's say, we're giving out all these loans to, uh, tech employees and bank employees and all these sorts of things, and then these companies have layoffs, and then those employees, for example, and now I'm getting into a very like this probably is
yeah,
not going to happen, but if those people can't continue to have that high income and they have to go somewhere else, they might not be able to afford their loans and they could default. And then we're holding on to this massive loan book that could be increasing in defaults. Now,
yeah,
I don't believe that. Like
yeah.
we're big bulls, so I don't believe that. But I guess that's the sort of change in pace is that he believes that we could be continuing to just grow our liabilities. And yes, it's more profitable until it isn't.
What's
Until it
the max loan loss default percentage SoFi was putting out? What was it, 4 or 6 or something?
Yeah, I think for personal loans, which is like it was 4.6%, something like that, 4.6%.
And that's like, is that SoFi like pushing it up a little, like giving them cushion?
It could be, right? I don't know. Um, but yeah, if you think about it, like it's
I
uh
think the credit score also like reflects like defaults coming your way. Cause like I'm watching my credit score too, and I like I closed out a bunch of like credit cards and loans recently, and man, my freaking credit score got rocked. You know what I
sure.
mean? For me doing like a good thing, like I'm getting rocked. Like I went from like a 800 to like a 720, and like I'm just like, what the heck? Now I got to build this back up again so I don't get screwed on, like if I need another vehicle or a house. So it's like these people, like, because I was watching that show that Chris guy was saying, the How to Get Rich,
Hmm.
and these people, they have like ridiculous incomes and their expenses are so high they need like personal loans and credit. They need it, but they're maintaining their incomes, so if SoFi's credit score is just not dropping, you know what I mean? We've been talking about defaults for 2 years.
It's true. It's true. And
What?
even you brought up Chris. I mean, one, does that mean you're a SoFi weekly listener? Is that what I'm
Oh yeah.
hearing?
Oh dude, I watch all of the videos.
Awesome, man. That's awesome. But I was just gonna say as well, Chris was the same guy that brought that up back whenever he was
The
more
defaults.
critical of the stock, was that he doesn't even really believe that people of this high income potential or high FICOs are even looking for personal loans. And now he's kind of switched on that and said, no, there's actually this class
Yeah.
of people that really need it. And that's why it's switched and he's a shareholder now. Chris Patel is who we're talking about, by the way.
Yeah, and the other guy's name's Chris. They're both Chris's.
Everyone's Chris. Everyone's Chris.
That's why I confused a little.
So yeah, I even did another interview with a guy named Chris with a Kris, from growth to value. So it's just so many Chris's are being introduced that I'm talking about with SoFi, but it happens. Um, yeah, what did you think about Chris whenever he actually switched and bought some SoFi? Did you think, that was a weight off our shoulders?
It seems like he was looking at like what I started looking at like over a year ago, which was the management and the leadership. That's where he got really excited, and I noticed that too, like with the Chad Borton. I mean, that's the USAA. I forgot his position prior, but I mean that guy was with them for 5+ years before that. What was it? The Fifth Third Bank, and then the other guy that running Galileo. I forgot his name. The bald guy.
um, that's
Google.
something White.
Derek.
Derek
Derek.
White.
He was with Google for a
Hmm.
while. And I mean, that's two right there. And then, of course, he was talking about Anthony Noto. I mean, that's three. I got to look into the other one or two guys he was talking about, but those three in leadership. Like, I love Chad Borton running the bank. That's why you're seeing like personal loans just skyrocket. And then like the video I just put out, which was going off the Chris's guy's tweet. I actually was looking at that. I was trying to get the update. You're not gonna believe this. I was looking at the update for the um the asset size, the ranking on the Federal Reserve, and 2 days ago it wasn't updated for Q1. It
I did
just
the
got
exact same
updated.
thing.
So I don't know why somebody I think was talking about it, but I looked and it wasn't updated. It was like for December 30th or whatever, and then boom, the March 31st update came in for Q1, and I was excited to see that because I remember SoFi was forgot what they were last quarter, maybe like 150
One,
or
yeah,
something.
149 or something like that.
And I know that's such a long way to go to get into the top 10, but dude, like the top 30 or 40 is just like it's just there. Like
Let's
five
take a
more.
look here.
Yeah. I
Um, where is SoFi now?
think they're 114, right? Yep, 114.
114. And actually, someone brought this up. I think it was Vadim on Twitter, saying that at the top here, First Republic is still on this list. So it's actually 113.
Wow.
Where's First Republic? I can't see it.
Do you know how these assets that you see like the ranking or not the ranking, but the amount, how does that correlate to the what we're seeing on the earnings report? Because then SoFi's earnings report say like 19, like what's being taken out? Is it like the cash or you know what I
So
mean?
from what I know, this is customer assets that they hold at the bank. That's what I know.
Customer asset.
Um, Now, uh, that being said, though, we could be sponsoring banks for other institutions like, you know, Robinhood, for example. We're not actually for Robinhood, but some of them I might not even know yet or switching over. Those could also pile on to SoFi in terms of assets under management.
Yeah.
In terms of how they actually calculate this number, that might differ from the quarterly numbers. I'm not sure. Um, I'm not sure, even though it says March 21st, could be I don't know, a different date or something. That doesn't even make sense now that I'm saying it, but um, who knows? The only thing that I try to compare this to, I don't compare it to SoFi's numbers. I only compare it to the last quarters that they've shown. How we're climbing. Which like 3 quarters ago we were like 400, then 200, 150, 113, um, and now like you know who
If you
knows
look
where we're gonna be.
If you look at another page just like that, it should be right next to it. It does the rankings like that. It actually shows the percentage of each bank, how if they went up or down and assets. There's one that actually tells you the percentage, and like on one page you can see the gap of like 30 banks, and SoFi's was like like there was some in the green, like 20%, 30%, but like you should see how many are pulling back like crazy, like in the top 100. It's like it could be
Man,
70 to 80% of them are going negative assets because of those
I,
deposits probably running and stuff.
I'm not a
People,
big fan of Robinhood or some like just as a stock. I mean, and whether you are or not, I mean that's
yeah,
fine. But um, I look at a lot of these companies. you're seeing all of these fintechs are seeing massive growths in their deposits. Customers are getting away from banks and they're actually looking at these companies like Cash App, Robinhood, SoFi as safe havens. It's almost like even though they're still putting their money in banks and they might not even realize that, they look at these fintechs as if they're different than the branch-owned banks.
Yeah.
And it's once again just another reason why people, like with the mindset that you're saying, are rotating away from these incumbent banks because they want more than 0.01% in their JP Morgan savings account.
I was just about to say that it comes down to the APY. Like that's what's getting, you know, I mean, when you're 30 years old to 40, you've been with a bank forever, to get you to leave, that's going to be really hard. Like you have to see that commercial 4.2 APY. They're going to think, oh, this is BS. There's a fee, or I got to deposit 10 grand, and they're thinking negatives. And then they go look, they keep reading. They're not seeing anything. Sign up for direct deposit. And that is a big task to take, having to tell your company to switch you up. But if they do it and it happens, why are they going to leave? I
Yeah.
mean, there's guys out there with, say, 100,000 in savings. He's going to get 4 grand. He's going to be able to pay his car bill, his dinner bill, his gas bill for free, like all 4 grand.
Well, the same thing that you're saying, like there's two things. You just said it's really hard to leave once you're
Yeah,
actually a part of these things. Now, if people can actually make the jump from 0% APY to 4.2% in SoFi, then the little jumps between that and maybe a Robinhood Gold at 4.65 or whatever it is,
yeah,
like people are going to find that struggle from going from SoFi to a different branch. So even the customers that we are getting, even at 400,000 new members
yeah,
per quarter, are going to be so sticky. They're going to stick around. And then there's massive numbers talking about like what is it? Over 50% of customers that we get in the first 30 days switch over to direct deposit.
yeah. That's crazy.
Like, so we're getting very sticky customers that are extremely hard to switch once they actually get over, like you said. And if the offer isn't unbelievable over at the other bank, then
Yeah,
they're not going to make their employer do that switch,
yeah,
you know? And then on the other side, you have Galileo working on products like direct deposit switch. I don't know if you remember
yeah,
looking at this, but they're making it super easy for their customers to get out, like to get out from their incumbent banks and come over to these fintechs. And Anthony Noto has been so vocal about this already. Like our competition isn't even the fintechs. There's so much, food over at the incumbent banks that they
yeah.
can feed off of that forever before they even need to worry about the Robinhoods, the Cash Apps, the PayPals, whatever. Like nuts.
I feel like when we were talking about this, like in 2020, about the fintechs like eating the bank's lunch, it definitely was starting to happen, but now it's like it's getting more and more serious when you got like companies like Lending Club getting these charters and then SoFi getting their charter. It's like it's actually happening. Like you're seeing the users just, SoFi's, I'm thinking 10 million in the next 1.5 years or something like that. And that's gonna be a big number.
Yeah.
And you got the deposits could be heading to like by year's end 15, 20 billion around there. These are some serious numbers. Those are the numbers that get you to like near top 50 banks. And then like look what happened in 4 years, 2020, 2021, 2023. Like look at the jump. So if I went from a 500 ranked bank to like potentially top 50 in the next like 12 months. So
Sure.
that's the real eating the lunch. Like it's happening. And if JB Morgan just keeps saying, "Oh, they're tiny. They're tiny. They're tiny. It doesn't matter. Like we make all these profits." Like it's going to backfire on them if they don't make a change, because they're sticking with their business model, which is thousands and thousands of branches. If you let it go 5, 10 years, it finally catches up, and then you see SoFi start adding 1 million users per quarter, and then you're gonna see all the
When do you think that'll be? Whenever we start getting into large member ads,
what are we talking, like 600,000?
or even like you said, like a million? Like, is that
Yeah,
years and years out?
I think that's possible. I think that's possible. If you get bigger, if you get bigger and bigger, and they take advantage of that, like that mortgage boom in 2024. Dude, think about how many people are going to be buying homes. Like you're talking what, 50 million like potential opportunity in the next year if rates just plummet. I think SoFi could be adding a million members per quarter, probably like 2025.
Sure, sure. Um, that sort of pairs well with Wyndham Capital.
Dude, that it's just like they did it so smooth and low key and sneaky. It's just like they just like I bet. I mean, you could see. I mean, okay, I was gonna say J.P. Morgan probably didn't even see it, but obviously they saw it because they're covering it. But stuff like that, I mean, they're doing that for a reason. Like I just told you guys at the beginning of the video, there's a guy emailing me for 10 days about a mortgage loan. I mean, this was 4 years ago, so that was probably what everybody was doing. But 10 days to tell me no, I mean, they're losing money, wasting their time on me. I'm not a client. I mean, I didn't get the mortgage. So this guy just, they probably spent $1,000 on him hourly messaging me and they didn't get anything out of it. They don't care. It's just like, it's just what they know.
That's crazy,
But
hey?
if you got,
I was even thinking about that whenever you said that SoFi didn't give you a personal loan. Well, if I remember correctly, tell me if this was you. That Pagaya, like in the SoFi app, actually recommended you an Upstart loan,
oh yeah. I thought it was SoFi. Yeah. I forgot Pagaya. Yeah.
right?
Upstart was the next option after SoFi.
So think about that, right? Like even whenever SoFi doesn't get the client or whatever, they're still benefiting from giving you a referred loan somewhere else, and
They
so
make
they're
money
still
on that, right?
benefiting from a loan that they didn't even offer.
They would make money off me, right? Like
Yeah,
if they'd probably make a 1% or 2%, 1% or something, half a percent.
some sort of lead generation fee. They send it to Upstart and go, hey, flip us a flat rate or something. Um, and that's pretty new to the business. Like that's pretty forward thinking of 70% of their loans that they were actually writing were being declined. Only 30% were taken. They were being very picky,
Can we
you
just
know?
spend 30 seconds on Pagaya?
Sorry?
Can we spend 30 seconds on Pagaya?
Do it.
What the hell happened to their stock? No, seriously, like their numbers aren't that bad. When I looked at the earnings, like the growth and shit,
Yeah.
dude, these guys went down to like 50 cents.
Yeah, I don't follow the company enough. I only follow them through SoFi. I remember seeing them like, if
Dude,
I remember correctly, I'm going to bring it up just so I'm not
their
just
numbers
so
are
we're on the same page. But um, didn't they run up to like $20 a share, then run all the way back down?
yeah, these guys do 200 million in revenue like per quarter.
Yeah,
Like,
I don't follow this company very often. Is this one that you're into or were into at one point?
I mean, I was following it because SoFi made that big partnership with them. They made an announcement and stuff, and I saw that they were going the SPAC route, and then boom, the stock goes from $10 to $1. Like I couldn't believe it.
Yeah, it was $2.70, ran up to just rough numbers because this isn't completely accurate. Almost $30, back down to $2, and I don't know what this was for. This almost looks like I don't know, something with a share and warrants or something. I'm not 100% sure. Maybe people in the comments can argue about why that was, but um,
Market cap's about 800 million. I mean, it's still a little high. That means they had a 10 billion valuation at their IPO.
geez,
Yeah.
geez.
It's weird stuff like that is why so many people lost so much money in SPACs. Like just weird ones like that, just crazy. But I
Yeah, how
think
many other large companies like SoFi are they partnered with? Because like I said, I don't follow them very often. Um, but like they work for us. Like
there you go.
stock
That's
aside, they're like what we need them for as a marketplace to sell our um less than ultra, you
yeah,
know, like you said, you had a FICO score. I don't know when you applied, but between 800 and 720, and
yeah,
SoFi still went, no, thank you.
yeah. Because they were looking at my like my cash position. It wasn't that high, but that's
Sure.
that's why they definitely gave me the red light. So they're not playing, guys. I'm telling you, they're not playing. I mean, they are not lending money out to like C plus. I consider myself like a B minus client. I mean, I would have paid it. Even if my money was tight, that credit score shows that I'd still get my payments done and stuff like that, but they don't care. They're not. It's just too risky. There's too many other opportunities out there, better clients to not put them at risk. You know what I mean?
Did you end up taking that Upstart loan?
Oh no, I didn't.
Okay.
I
Okay.
didn't. I think I looked at the rate. It was getting a little too crazy. It was like I think like 15 plus or something like that.
Yeah. Yeah.
So I was just
Well,
like,
that was the thing that I was telling you about, before, whenever we were saying, they expect, I think, a 4.6% um, default rate on their personal loans. Like you said, I think that it might be conservative, like on the high end, just
yeah,
to add some cushion. It's better to do that on the upside than the down, I guess. Um, they average about 12.8% or 12.5% on their personal loan interest rates. And then they also have about like a 3, almost 4% cost of funding. So 3 to 4% cost of funding, maybe a 4.5% chance of default, but a
yeah,
12.5% interest rate that they're earning. Like they are still very profitable. So profitable.
yeah. It's crazy how much like profit the lending did just last year. I mean, just profit on its own. I forgot what it was, but it was what was it like 200 million plus or 300? I don't know. It
Yeah.
was it definitely carried the weight for the financial services losses. Like it carried all the weight every quarter where those losses were crazy. And like I keep saying, once financial service, Anthony Noto was talking about that on the quarter. He said we will have all three business segment, and look, it looks like it's kind of aligning. Like he's saying all three business segments profitable, and then it's kind of aligning with like we're gonna be profitable. So it's kind of like, you know what I mean? It's just together, like the three business segments, and then the company actually turning a profit. So that's probably what they're waiting for. Um, like
Maybe I can share my screen here. This is just a little dashboard that I like to show from time to time.
yeah,
Um, just look at a couple different things that we can see in the quarter. So the technology platform was a little bit of a problem. Maybe we can talk on that as well.
yeah,
But the revenue split here, I think they said in the earnings presentation before they actually spacked onto the market, they said they wanted to be a 33% split by 2025. Do you think that's still going to be on target? Do you think it might be a year late? Do you think because lending? Oh, I we can't actually see the breakdown there. Um, the blue is the lending, still makes up the large majority of the revenue made. I just took a look; it was 336 million for. Maybe I can hover over it. Maybe
so what is that?
337 million for lending, 81 million for financial services, and then technology platform actually dropped to 77 million. So, like you said, the first quarter ever that financial services actually made up a larger pie than the technology services platform.
Yeah, I think they still got a long way to go, but 68%, yeah, that's still, I mean, that's a long way to pull lending back to a third of the pie. I think financial services is about to rocket. I mean, you could see what's it at right now, the financial service, the percentage. So that
16%.
that could be at like 25, like in the next like 9 months, like three quarters, like easily. It's just Galileo is just they or the tech platform, they just need to, they switch they switch their focus up. They're not chasing all these newly, funded, fintechs, these small ones. It looks like they feel like they have a good enough technology uh, now, like all built on their own in house, and they're probably letting these banks test it
Technisys,
out.
baby.
They're probably letting them test it out for free. Like they're not going to just go in and charge them. They probably, like he said, proof of concept. Hey, we'll let you use this platform for free 90 days, and let's see, if we save you some money. And if they start seeing them save money, maybe they see that their ratings get, an increase, like not so many complaints. That's when the big banks might make the switch, and you only need to land one or two. Like if you land one or two, I mean Galileo could go like it could double or triple in revenue like easily because there's just too many damn people at these banks. So you
Yeah,
just need to land one. Yeah, once you land one, you can get more.
Not only that, I mean, from what they said on the last quarter is that these larger institutions, they just need more products from Galileo. So like they're going to use so many more services, which means the average revenue per user is going to skyrocket.
Yeah.
And this is a part that I wanted to talk about because a lot of people still misunderstand this. Um, I think Galileo's profit margin right now, or contribution margin, is about 30%.
Yeah, 30.
Technisys is about I think 19% low, under the, or sorry, high teens, under 20 percent. Awesome. Okay.
Yeah.
But Chris Lapointe said this a while back on one of his fireside chats, that the two of them together going after large clients could bring their contribution margin above 40%.
Yeah.
So the two of these businesses that have lower profit margins could increase both of them, not only to offer it to a large client, but to offer it to all these clients that they have in Mexico and Latin America, and also bringing Technisys up to North America. We're
Yeah.
just starting to see this ball roll. Okay. Last quarter, we lost a single large client, our second largest client, current, right? So that's why we're seeing the drop off. But like you said, a single or two companies could completely turn this around. And it might actually make the growth at Galileo much more sporadic because you could see a single large customer that brings on 20 million new users.
We need to be prepared though, because Anthony Noto, they did ask him about the revenue growth and Galileo, the tech platform, and he did say, um, it's probably going to be flat the next 1 to 2 quarters. And I mean, it might be go up a little bit, or he said right around the same. Those were the words he used, right around the same. So you got to be prepared for that in the next couple of earnings. But he did say Q4 we could see a little like a change happen in Q4. So maybe he's just they're doing their under promise again, and maybe Q4 is the quarter where it just cranks back up out of nowhere. So
Who knows whenever they're going to land these clients, right? Like the sales cycle for their clients now are much longer.
yeah,
And that's sort of the I think the problem now is, like, now that we're going after big fish, it's like we have to almost look at Galileo completely differently. At least that's my perspective. Let me go ahead and just share this screen again one more time. How do I bring it back up? Stock-based compensation, little chart over here. What do we think about this?
I think,
So this was
uh,
one of the largest bear cases. You were covering this like crazy at the time,
dude,
but
I was getting
now starting to
shredded.
drop.
I was getting shredded on YouTube, like people commenting to me about this. So many people were disappointed, like in the stock based compensation, because somebody was on Seeking Alpha, and that, I mean, I know you see these little articles, but those things spread like wildfire, and then it just puts something in people's brains, and they don't let it go. And Bears rode that for 9 months, the stock based compensation,
Yep.
and it was the whole thing of what it was based on the revenue, and then it finally went away after 12 months because the revenue came out with the, what do we have, 50 or 60% growth, and then that really put a hammer on stock-based compensation. And I think what are we at right now, 17%.
Yeah, roughly. Yeah. Yeah. Let me bring it
17%.
back up.
Yeah. So I mean, there's so many companies. Like if you look up like 100 other of these SPACs, I mean, I'd say 95% of them are going to have stock-based compensation. It's part of the game when you have to grow rapidly and hire. Like you should see like the type of jobs like SoFi has to bring on to their the company. Like these are expensive um, jobs, and you gotta, the money, it costs money, and then you got the stock-based compensation. It has the bonuses included too, right?
Yeah. I mean,
Yeah. So
it, it's not cash based. Like they could be increasing their pay now or something like this. It's the stock based compensation that people get so worried about, even though compensation is compensation. Like whether you give it away in cash and then our income goes, or a net income goes down, or you give it in stock and then your ownership goes down, it's equivalent. But people just really hate stock based compensation because it's a hidden expense. You have to go to a different sheet on the 10Q to kind of find that number. And so, um, everyone gets a little bit weary now, but
I'd like to
still.
see it. I'd like to see it below freaking 10, like, as fast as possible. Like next 2, 3 quarters, I'd like to see it below 10.
Yeah, I
Maybe.
actually think if we look at this, yeah, 13.6%
Oh wow.
is
Wow.
the stock-based compensation as a percentage of revenue.
Yeah. So getting
But yeah,
close. And it's still dropping off. Like, what did it drop off last quarter? Like $6 million or 8 million, something.
yeah, yeah. So before we were doing almost 71 million. This quarter 64 million. So yeah, almost a little over or just about $6 million.
What did Chris
Um,
Point tell the Chris guy? He said it's really going to drop off in 2024. Is that what he said by the end of the year? Like it's going to vanish or something like that?
yeah. So not. I think under 10, they want to get into single digits. 9, 8%, hopefully. And I mean, you're going to have to continue to give stock-based compensation the whole way through. It's just a matter of what they do. If we start hitting, gap profitability, continue to build our book. If we can buy that stock-based compensation back, we can buy shares. The companies do share repurchases all the time, like
Yeah.
PayPal, for example, another company that I'm
Yeah.
buying like crazy these days. But um, yeah, I don't know. Things are looking great, and the stock isn't reflecting it at all. And I think that this, since you've been covering it longer than I have, has been the case, right?
I went
And
through the
and
hard days. I was going through the hard days.
sure enough, and like even then, my first purchase, I think, of this stock was $14.30 or 40 cents, something like that.
It's pretty good.
So I've had to dollar cost average on my way down. Um, But that being said, I wasn't even really a big fan of SoFi in the 2025 era. But now it's just who can look at this company and think that this is misvaluate or misevaluated, because I feel like the bear case continues to change as people go on. It's either it's a stock-based compensation issue, it's risky loans, and
Yeah.
the tech platform might not be working. It just continues to keep changing.
Yeah.
Um,
Guys are good. It's I'm telling you, it's you got to think when a company's market cap is low, you know what I mean? It does restrict things you can do because when your market cap gets, up there, you kind of have more leverage like out in the world, Like if JP Morgan could keep us at 5 billion forever, they would, like 5 billion market cap. When we get to 100 billion market cap, I mean, it's just like it's hard to stop that. You know what I mean? Like we just keep getting bigger and bigger in valuation, and you got more opportunities to make more acquisitions. That's what really like can hammer it. When you just staying at that lower market cap because you can technically like all these companies. Remember when they would pop, they would do a dilution. And they could pull out, a bunch of money, and some investors they don't like it, but it is good for the company, longer term. If you can pull out $1 billion out of nowhere, I mean,
sure.
that kind of helps you from going BK for years out. You saw a bunch of companies do that during the frenzy when the pandemic was happening. Even good I don't know who there was some like big companies that were doing that. Some dilution when their stock got out of whack. I mean, it's just the market cap. Someone likes it down here. I don't know who it is. Could be 5 or 10 guys that are just have $2 billion worth of freaking shorts every year, and they just perfect timing, earnings, hammer it, pay these guys, short article like that. So that guy had to have been paid. It couldn't just been him and his company wanting to do that. There had to be someone else encouraging him to write an article like that, like 2 articles right after the earnings. You know what I mean? And it's technically illegal because you know what I mean? It's kind of insider trading if someone tells you to purposely write an article for a profit, but it's just so hard to catch people doing this type of stuff. Like these what's it, Hindenburg? I mean, these guys are writing 2 or 3 a year, and they turn a massive profit right before they drop the article. They're loaded up, and you know what I mean. Isn't that technically illegal? Like,
I don't think what they're doing is illegal, because they're just writing their thesis. If they were to spread illegal information, saying stating things that might not be true, I think they can be held accountable. But to just say, hey, we don't like this, this, and this, and this is our position.
I'm
That's
saying
technically,
I'm just saying like they tell someone like we're gonna write this article.
yeah. I mean, depending, yeah. If they're taking some cut from other Wall Street people saying, hey, we're about to launch this, we're telling you this, give us an information fee. I mean, yeah, probably. But how do you actually, you know, prove that?
I know it's almost like
No, I
it's
I don't actually follow any of the, like, I follow almost zero technical analysis for SoFi. Any of the short interest, I have zero idea what the short interest for SoFi is right now.
probably like 10.
Yeah, the truth is like it's so out of our control. This
Yeah,
is how I see it. This is not, and I could 100% be wrong. But if it's out of my control, the only thing that I think is like I just have to pick great companies and hope that eventually it's
they
going to
let
get
off.
to such a cheap valuation that I'm buying it at, that maybe a worst comes to worst, a JP Morgan will buy out the company. Even if that happens with SoFi, I'll make a lot of money. You know what I
Yeah,
mean? It's not the optimum strategy that I want, but if they're going to buy it out for a 300% gain, I mean, hey, I'm happy if they come in and clean everything up for $15.
yeah. I mean, I'd be happy.
Yeah, it wouldn't be. I'd rather run it out for you know the rest of the time and see a 20-30% gain on my stock every year, growing at the rate that the company is growing at. But
Did you
that
did you
probably
look
won't
at
happen.
did you look at the video I dropped where I mean it's kind of news, it's already out there, but they did like the updated filings actually happened, like all the Q1s. It was like our four biggest holders was I think it's BlackRock, Vanguard, the GOD Capital, and then Silver Lake. Those are the four. And then all four of them either held or increased for Q1. Like nobody sold anything. And like those four investors make up like 1/4 maybe of the market cap. But you see
Wow.
what I mean? They're not selling. And I think three of them added. I think that Silver Lake was the only one that just held, but everybody else just added like 1,000,000 shares, 2,700,000 shares. So it just seems like they're waiting to like boom double, like everybody just double. They want to see they need to see something, like they really got to see it before they really that's when you see the market caps, like you see Nvidia go from 200 to 600 billion in freaking 1 year. These guys got to be buying. It's not retail investors. I mean, retail investors probably make up $10 billion, $20 billion of 700 billion market cap. It's these guys, they have to pull the trigger to get these insane valuations. And it looks like they're just waiting.
I mean, that could be true, and you know what? A lot can change whenever the company starts to uh, not only be gap profitable, but also be gap profitable for a few quarters in a row.
Yep.
That's also super important as well. And you're already seeing, I don't know if you follow Palantir or anything like that, but you're starting to see a very huge change in the way companies value the stock overall, and it could change the price instantly.
Yeah.
Instantly. I used to follow Tesla all the way through, back since, I think my first purchase was in 2017 or something like this. It held a certain price back then. It was like $50 a share, but it's been so many stock splits since then, so I don't know what it would be today.
Like, fuck.
Um, and there was a complete change in the valuation because they did 4 quarters of gap profitability.
Yep.
Completely changed the way Wall Street looked at this stock at all. They were looking at it like an auto company, and then they started looking at it like a profitable tech company, and it skyrocketed.
Yeah.
That could happen here. Like
Yeah.
that's my thing too. As long as we follow the company, their earnings continue to beat, and the red flags people like you and I can continue to identify and hold them accountable. Like I'm not a SoFi bull to the point where if something is to change, I'm going to continue holding. I'm holding on to this company because it still remains a great opportunity, not the other way around. I don't know about yourself, but
Yeah.
um, you know, I think that we are holding on to a good stock here, and it's just a matter of time before we hit gap profitability and a potential revaluation of this entire stock.
What's the stock doing right now? Because I haven't looked. Like I usually look like daily, but I haven't looked in a. I know it was like 4% at one point today, which I was kind of pissed because I'm trying to buy under 5 and it's not happening.
Yeah, well, you might get your chance because, well, not
Oh,
under
really?
five, but
It's
it
going
is. Here, let me share the.
I gotta see this. What the
It's
heck?
just dropping in the last hour. So, practically since we've been talking,
Oh wow. See, that's crazy that this stock can move like that. What was it? Plus 3 or 4? It was plus 4.
and then, but get yourself some shares. I only buy whenever I have money to do so, which is about like every week. Then I buy more shares. Right now, that's not the time. So
Yeah, dude, I bought really heavy again in the 450, 448, 460 range. And then I wanted to buy more. So I bought, because remember this morning or 2 days, it was like 490 in the pre market, which was pretty good. And then boom, we went up. What yesterday was a 7% green day. That was pretty weird.
yeah, no, I honestly I don't follow all the positions on a day to day basis just because, like truly, I try to hold it like I there are some stocks that I've been holding for I've been investing for 7+ years. I've held stocks for 7+ years. Like I
Yeah.
try to make money and then I hold positions and I want to hold them for a very long time. I want to see a dividend out of SoFi. That's
Yeah.
my goal. Because by the time that happens, this stock price will probably be in the 30s or something like this, and my ownership percentage will be massive. So if they do a 1% dividend, it'll be a 6% dividend for me.
Yeah. Especially with the yield.
Right, right. Why don't we call it there?
Yeah.
And I am going to be doing another portion of this video. Kyle agreed to stay on for a little bit longer just for a member only video. So if you guys want to see that, please go check it out. All the members will be able to see that. We're going to be talking about all different stocks. Like I know he was talking about new bank. So maybe I'll pitch him on a little bit of new bank and see what other stocks he's holding. Maybe I'll pitch him on a little bit of PayPal. Who knows? But aside from that, for the people that are just watching this, appreciate your time. And yeah, bye for now.